Welcome to the Deep Dive, your shortcut to understanding what really matters in the world of business. Today, we're diving deep into Ambarella's Q2 fiscal year 2026 earnings call. There's been quite a bit of buzz around this report, and we're here to unpack exactly why.
That's right. Ambarella, a company that's really positioned itself as, the pure play edge AI enabler.
Yeah.
They just dropped an earnings report that genuinely lit up the market.
Yeah, it certainly seems that way.
So we'll be digging into the critical insights, the financial wins, and the strategic direction that seems to have investors so enthusiastic.
Okay.
Get ready to understand what's really driving this company's rise in the very dynamic AI landscape.
All right, let's kick things off with a snapshot then. The headline numbers, because they are quite striking. Ambarella didn't just beat estimates, they really crushed them. Non-GAAP EPS came in at Varel 15 cents.
Yeah, impressively topping the consensus, which was only 75 cents.
Exactly. And on the top line, revenue hit $95.5 million, again, sailing past the $90 million consensus.
Right. And that's a massive 49.9% year-over-year jump.
Almost 50%, and 11.2% sequential increase, too.
Yeah, marking their fifth consecutive quarter of record edge AI revenue. So real momentum there.
Definitely seems like it. And the market reaction.
Oh, the market absolutely loved what it heard. Reacted with a substantial after-hours surge in the stock price.
Oh, that jump.
Yeah. This initial reaction signals really strong investor confidence. It seems primarily driven by these clean beats on both profitability and revenue. Coupled with that notably raised full-year guidance we'll get into, it's clear there's a compelling accelerating growth narrative here.
Okay, so investors are buying into it.
Definitely.
Beyond those striking top-line numbers, let's dig a bit deeper. What about the rest of the financials?
Okay.
Because, for some investors, a NXT $20.0 million GAAP net loss, even if it's narrowed, might still raise an eyebrow.
Right. That's a fair point.
Are we seeing the market maybe prioritize growth a bit too much here, or is there a valid reason to look past this GAAP loss for now?
That's a great question, and it's kind of a key piece of the puzzle. While the GAAP net loss is definitely there, the market is, overwhelmingly focusing on the non-GAAP profitability, which was very strong.
Okay.
And other key metrics paint a picture too. Non-GAAP gross margin was 60.5%. Now, the CFO noted this was at the lower end of their prior guidance, mainly due to product mix. But crucially, the company's cash and marketable securities reached a healthy $261.2 million.
So they have flexibility.
Exactly. Reinforces their financial flexibility. And look, this isn't just about projections. It's backed by tangible market penetration. They've shipped over 36 million edge AI processors to date.
Wow, 36 million.
Yeah. So the market sees a path, I think, to future GAAP profitability, even with these current investments in growth.
Okay, that makes sense. With those numbers in the rear view, then, what's next? Ambarella's outlook seems just as compelling.
It really does.
For Q3 FY26, they've guided revenue between $100 million and $108 million. The midpoint there, $104 million. That's an all-time record quarterly revenue target.
It is. It's an ambitious target. Shows a lot of confidence in their pipeline, doesn't it?
It certainly does.
And that optimism extends right through to the full fiscal year 2026. Management significantly raised their revenue growth outlook.
Okay, what's the new range?
To a range of 31% to 35%. That implies a midpoint revenue of roughly $379 million.
$379 million.
And this midpoint, they stated, would represent an all-time record fiscal year total revenue. So this isn't just growth, it's a clear acceleration.
Right.
And Edge AI is expected to be about 80% of total revenue for the year. That really showcases their dedicated focus.
80%. Wow. And what about spending?
Well, non-GAAP operating expenses for Q3 are expected to be $54 million to $57 million. That reflects increased new product development costs, fueling that growth. Full-year OpEx growth is expected around 12%.
So growth, but seems like disciplined investment, too.
Exactly. That's the balance they're aiming for.
Now, this impressive growth, it isn't coming from just one area, which I find really interesting. The CEO talked about the rising breadth of edge AI applications. Yeah.
For you, our listener, what does this rising breadth actually mean for Ambarella's market position? Where is this expansion truly happening?
It's fascinating, actually, because while Ambarella's edge AI journey started in, enterprise security, smart home, automotive safety, telematics, sort of the expected places,
right,
they're now seeing really rapid emergence in three kind of brand new key segments.
Okay, let's break those down. What's the first one?
First up, portable AI video applications. These are already in production, and importantly, they're driving higher average selling prices, or ASPs.
Higher ASPs, okay, so more revenue per chip.
Exactly. Think action cameras, panorama cameras, body-worn cameras. A really significant win here is Insta360. They're also known as Arashi Vision.
Oh yeah, Insta360.
They're launching the world's first 8K 360-degree drone, the anti-gravity A1. And it's powered by Ambarella's CV5 AI system on chip, their AI SO.
The brain on the device, basically.
Previously, that AI SoC is handling all the complex AI tasks right there, and that drone's set for a global launch in January 2026. Interesting. Mostly consumer or enterprise, too.
Well, largely consumer-oriented, yes, but these applications definitely see critical enterprise use cases as well.
Okay. What's the second area?
Second, we're seeing strong traction in robotic aerial drones. The first major win in this segment is expected to start shipping by the end of this fiscal year.
So, quite soon then.
Yeah, with high-volume shipments anticipated shortly after. This musket it's rapidly evolving towards higher levels of autonomy, a bit like the automotive sector, actually.
Makes sense.
And the energy efficiency of Ambarella's chips is just a critical advantage here. Think about it.
Battery life.
Exactly. For a battery-powered drone, every single milliamp saved translates directly into longer flight times, maybe more payload capacity, or just smaller, lighter batteries.
Yeah.
That's a huge competitive edge.
No doubt. And the third area.
And third, this is a really crucial expansion, edge infrastructure. Their first win involves a global networking customer.
Okay.
They're rolling out a compact on-premises network AI appliance using Ambarella's N1655 system on chip, their SoC.
On-premise AI. Interesting. When's that expected?
That's slated to enter production in fiscal year 2027. This appliance will integrate large language model-powered natural language search.
LLMs on the edge appliance itself.
Yeah, demonstrating a clear move into higher value enterprise-level applications. And that $500 million serviceable, addressable market they mentioned for this segment.
Right, projected over 5 years.
That represents a significant, potentially untapped revenue stream for Ambarella. It could really open up a whole new category of enterprise growth that just wasn't there before.
So it really sounds like IoT, especially these new portable video, drone, and edge infrastructure applications, is emerging rapidly and driving a lot of the current momentum.
It certainly seems that way right now, yeah.
But what about their traditional automotive autonomy business, the L2 plus to L4 applications? Is that still a long-term focus, or is the company maybe de-emphasizing it a bit to chase these faster-moving IoT segments?
No, it absolutely remains a long-term focus. Management reiterated its significant lifetime revenue opportunities there.
Okay, good to clarify.
But, the automotive segment fundamentally just has a lower frequency of OEM decisions. Programs often face delays.
The famous auto timeline.
Exactly.
Yeah.
And there's just a much longer time to revenue. So it means that while they're actively working on projects like the CB380 family, the IoT segment is simply emerging more rapidly and offering quicker returns right now.
So a pragmatic approach.
I think so. Management expects automotive to eventually outperform IoT, but likely more in the 2027-2029 timeframe.
Right, when those major OEM design wins really kick in, like that VWKS 2.0 platform you mentioned?
Precisely. So in the interim, they are strategically allocating more resources to capitalize on the faster-growing IoT side, but they're still winning in auto.
Oh, like what?
Recent automotive design-ins include Sensara's AI multicam platform with the CV7T2 AI SO, Audi's E5 model using their CD22 FS for e-mirrors in China, BIC Stellato A9 for rear-view mirrors, and a leading Chinese OEM for 8-megapixel front ADAS. So still making progress.
Okay, so active on both fronts, but prioritizing IoT resource allocation for now, given the speed.
That seems to be the strategy.
It's clear this common tech base they have allows for incredible agility, right? Expanding across these diverse markets.
Absolutely. That's the leverage.
But with such rapid growth and all these diverse new markets, how are they ensuring their operations are as robust as their technology, especially thinking about supply chain and inventory risks? We've seen those industry-wide corrections recently.
Yeah, that's a critical consideration, definitely. Management confirmed they maintain a pretty robust process to address this.
Oh, so?
Well, they conduct monthly inventory reviews with customers and distributors. They also have internal checkpoints to monitor order patterns.
Okay.
And based on these checks and ongoing discussions with, customer peers, they seem confident there isn't any meaningful inventory buildup at their customers.
So mitigating concerns about demand pull-ins or like geopolitical stockpiling?
Exactly. It shows, I think, a good grip on their operational side, which is reassuring.
And what about how their customers are actually, adopting and using their platforms? Is it easy for them to integrate Ambarella's tech?
Yeah, apparently customer feedback on their Cooper development platform is very positive.
It's a platform, right?
It provides a unified hardware and software environment across all their chips. This makes it significantly easier for customers to develop and port AI models.
So it streamlines things.
Hugely. It really aids product development and eases transitions between different Ambarella solutions. This operational expenditure leverage is key. They develop core tech once, apply it efficiently across many different apps.
That sounds like a big advantage for customer stickiness.
Definitely. Reduces friction.
And finally, how is all this growth translating into their revenue breakdown for the full fiscal year? What's driving that top-line expansion? Is it volume or price?
It's actually both. For the full fiscal year 2026, the significant revenue growth is attributed to roughly a 50-50 split between average selling price increases and unit growth.
50-50.
Which indicates strength on both fronts.
Yeah.
That's a very healthy sign for the company's trajectory.
Yeah.
It's not just selling more chips, it's selling more valuable chips.
Right. Okay, so let's tie this all back to you, our listener, and what it means for the market. This strong performance clearly resonated.
Absolutely.
Ambarella shares surged almost 20% in after-hours trading. Hit around $84.70 from a $70.63 close. I think I saw it touch $87.50 even.
Yeah, big move. And it wasn't just a volume pop either. Options activity saw calls heavily outweighing puts.
Signaling strong bullish sentiment then.
Very much so, from the investor community.
So the market is prioritizing this growth story.
Indeed. Prioritizing the robust growth narrative and the future potential in edge AI over those current gap losses. We're seeing what we sometimes call a divergence watch, where the market is willing to overlook that Nanic $20 million JAP net loss and even the gross margin being at the low end of guidance, in favor of the impressive non-GAAP profitability and that accelerated growth outlook.
And the broader market helps too.
Yeah, this positive sentiment is further bolstered by the broader industry backdrop. Global semiconductor sales rose 7.8% quarter over quarter for Q2 2025. And industry growth is projected at about 11.2% in 2025. So it's a very supportive environment for companies like Ambarella, whose focused edge AI strategy positions them well within that trend.
Makes sense. Now, what about those M&A rumors they were swirling around recently? Did management address them directly on the call?
They chose not to comment directly on the rumors, which is, fairly standard practice. However, the CEO did sort of suggest that such speculation likely stems from Ambarella's leadership and their singular focus in edge AI. Having shipped over 36 million units probably doesn't hurt either.
Right. Draws attention.
Exactly. So for you, the listener, the takeaway seems clear. This growth isn't just a flash in the pan. It appears driven by a broad expansion of AI applications, directly enabled by Ambarella's core technology and their innovation cadence. It makes them a really compelling player in the current market.
All right. Well, speaking of compelling plays, it's time for our This Is Not Financial Advice segment.
Yes.
Where we pitch an outrageous but plausible trade idea straight from the hypothetical hedge fund playbook. What have you got for us this time?
Okay. All right. Given Ambarella's, compelling Q2 performance, the significantly raised guidance, and particularly the rapid expansion into these high-growth, high-value edge AI segments.
The drones, the edge infrastructure.
Exactly, like robotic aerial drones and edge infrastructure. Here's a thought for the investment committee.
Okay, let's hear it.
Consider establishing a long position in AMBA, specifically targeting a price re-rating driven by these nascent but potentially huge revenue streams.
Okay, long AMBA. How do we make it outrageous, though?
Right, to make it truly outrageous yet plausible. This could be a highly concentrated bet. A bet on Ambarella's unique energy efficiency and that unified Cooper platform becoming the kind of de facto standard for autonomous drones and next-gen on-premise AI appliances.
So betting they become the standard.
Pretty much. And maybe we could pair this with a targeted short position on a legacy, more diversified semiconductor company, one that has maybe struggled to pivot effectively into pure play edge AI.
Hedging the bet a bit.
Right, hedging against broader market volatility while really maximizing exposure to Ambarella's specific tailwinds. The plausible part is recognizing the market's current focus on growth.
And the outrageous part.
The outrageous part is the sheer conviction that these emerging segments will generate truly disproportionate value. potentially making AMBA an irresistible acquisition target in, say, the next 12, 18 months.
Acquisition target. That adds a twist. Okay, food for thought. Definitely not financial advice.
Definitely not.
All right, that wraps up our deep dive into Ambarella's Q2 FY26 earnings. A strong beat on both the top and bottom lines, robust guidance, and that expanding portfolio of edge AI applications.
Yeah.
From portable video to robotic drones and edge infrastructure. It's painting a very bullish picture for the company, it seems.
It does. Ambarella is really leveraging its core technology and that rapid innovation to address an increasingly broad set of opportunities in the edge AI market. It's leading to record revenues and just a palpable sense of momentum. So for you, the listener, maybe consider this provocative thought. As edge AI becomes more and more integrated into our everyday devices and infrastructure,
Right.
how quickly will the market fully grasp the profound implications of Ambarella's focused pure play strategy? And, what does that ultimately mean for its valuation relative to the more diversified semiconductor giants over the long run?
Something to mull over. We hope this deep dive has given you a shortcut to being well informed. Join us next time on the deep dive for more market insights.